My property taxes just doubled overnight. Is this even legal? You finally got that last box unpacked from moving in last year. You're getting decorated for the holidays, and the new property tax bill comes in and you've nearly fainted on the floor. I mean, how could they possibly double? That's ridiculous, right? Look, if you're out looking at homes to purchase or just purchased a home and it's gonna be a renovated one or a recently flipped home, you need to pay attention to this. What exactly am I talking about? Well, recently flipped or renovated homes, or even if you're gonna go in and do them yourselves, have a sneaky hidden cost that is just lurking around the corner if you're not paying attention. And the government, cannot wait to get their grubby little hands on your hard-earned money. This can be truly devastating for anyone that is on a fixed income, or you went to that closing table and you made your budget around that closing payment that was promised to you at the beginning of that mortgage. And unfortunately, I've had many friends that have bought houses out of state or not used me that said, Dan, how could this happen? I wasn't prepared for this. So how can they even do this? Well, the amount of taxes that are calculated out are based on the present value of the home. So when I have friends that are actively looking or we're working with clients, we always tell them, hey, look, if this is a recently flipped home or you're gonna go in and do major renovations, the current value is going to be the taxes for the first year. But the government goes in every single year and reassess that property. Now, the likelihood is that they're actually going and be using those old photos, and or when you go to pull permits or when the contractor goes to do permits on that property, all of that is going to be recorded and they're going to be basing the new value. So you may want to check the tax records of comps that have sold recently in the area that are about the same value and make sure that those estimated taxes are similar to the house that you're buying. There really isn't any mystery to how this is calculated. In Virginia Beach, who actually lowered their property taxes last year and are the lowest in our area, are about 99 cents per $100 of value. So if you're buying a $500,000 home and the taxes on there are estimated at $2,500, you know that the high likelihood the next year that those taxes are going to double. Well, $2,500 divided by 12 is about $200 a month. That can be a big impact on anyone that has a fixed income, or if you have a tight budget, or if you just really don't want to give your money to the government. I'm tired of it. So if you'd like someone that's gonna make sure that gives you proper advice on how to make the right decisions moving forward, you can give us a call at the number below or text, and all of our information is down below and you can jump directly in our calendars there. Now, obviously, this is not all bad news. That revenue does go somewhere to benefit both you and your neighbors. Revenue from property taxes goes towards several great things for you and your neighbors. That includes education, your public schools, roads, fire department, police department, your public parks. All of those things come from property taxes. And although these services benefit everyone, those property taxes can be quite burdensome for some individuals. They tend to increase over time, as city budgets do, and as labor and material expenses tend to increase over time. And even after you pay off your mortgage, those taxes will be around forever. Now, all municipalities are a little bit different. They set the millage rate or the mill rate based on the public need for all of those important services that are benefiting you. What ends up happening is an assessor who's hired by the local government will go out and actually physically visit the property. Not all the time. Sometimes they use automated software or look up the prior sales price if they're feeling a little bit lazy. And in some jurisdictions, this can be a percentage of the market value or it is market value. All varies depending on the city or area that you're in. So if the recent sale has all these gorgeous photos of this recently renovated property, you might be kind of screwed if you're not prepared for this. My main piece of advice here is to base your property taxes on the projected future value of the home or assessment, not the current one, because you could be in for a big surprise when the tax man comes knocking at your door for some more money. Soon we will be talking about how to maybe trickily or sneakily reduce those taxes in another video. But for the time being, YouTube thinks that you might want to watch this one next.